Hey everyone, it's Bryson with Buy with Bri DFW, and today I just want to share with you 4 tax breaks that you get as a homeowner. So every year we file our income taxes with the IRS, right? Well, wouldn't it be great to have 4 tax write-offs that you can use each year to help you possibly get a larger refund if you're a W-2 employee, or even help lower your taxes if you're self-employed? Let's jump right into it and talk about the 4 tax breaks. All right, so the first tax break is going to be the mortgage interest paid. A mortgage is made up of 4 components: principal, interest, property taxes, and homeowner's insurance. And for the first couple of years that you make your mortgage payments on your home, most of the mortgage payment each month goes towards the interest. So at the end of the year, your lender is going to send you, most likely electronically, what's called a Form 1098. You're going to take this form and it shows exactly how much interest you paid for that year, and you are going to upload it with your IRS documents that you're going to turn in, and you're going to be able to use all the interest that you paid as a tax write-off, which is going to be a significant number once you add up all 12 months of interest paid. All right, so secondly, to go in hand with the mortgage interest that you've paid, if you buy a home and you put down less than 20%, you're going to have a small fee added to your mortgage each month with what's called mortgage insurance. Mortgage insurance just specifically protects the lender should the borrower default on the loan or not be able to pay it anymore. This does eventually go away once you have 20% equity in your home, which, the way homes are appreciating, doesn't take as long as it used to, but up front you are going to have the mortgage insurance. The mortgage insurance is able to be used as a tax write-off, but this is dependent on how much income you make each year. So the best thing to do is to talk with a tax professional to be able to help you determine how much you actually are able to write off. All right, so the third tax break that I want to talk about is going to be property taxes. So in the state of Texas, because we don't have state income tax, and we have some other good tax breaks going our way, well, the good thing is although we do pay these property taxes, the IRS allows us to deduct up to $10,000 worth of property taxes paid for that previous year. I've seen that average property taxes float around the $5,000 to $7,000 a year. So being able to write up to $10,000 off does usually play a nice benefit for taxpayers. The last tax break that I want to talk about is going to be tax-free profit on the sale of your home. So if you've lived in your home for a minimum of 2 years and you've been using it as your primary residence and you decide it's time to sell the home, the IRS allows a tax-free profit. If you're selling the home and you're filing as a single, then you can up to $250,000 profit on the sale of your home is tax-free, meaning the IRS doesn't take any money up to $250,000. If you're filing married joint tax return, and you decide to sell the home, then the IRS allows you to profit up to $500,000 tax-free. So this is super beneficial. The good news is that this exclusion doesn't only apply once. If you decide to sell your home and you buy another home as your primary residence and more than 2 years goes by and you decide to sell that home again, you're able to use this exclusion again. Again, up to $250,000 tax-free if you're filing as a single, and up to $500,000 profit tax-free if you're filing as married joint. So this is super beneficial, knowing that you're able to sell a large asset and the IRS doesn't just come take 25, 30, 40% right off the top. All right, so just a quick recap of the 4 tax breaks. Your mortgage interest that you pay every year, you're able to write that off. The mortgage insurance premium that you get for doing less than 20% down payment, talk with a tax professional, because depending on your income, there's going to be a little bit of a write-off for you right there. Another write-off is going to be the property taxes. The property taxes in Texas are a little bit higher. So being able to write these off at the end of the year definitely is going to be beneficial for you. And then the fourth tax break is going to be the tax-free profit on when you sell your home. Just make sure to live in the home for more than 2 years, and it's got to be your primary residence. It can't be an investment property. So I hope that these 4 tax breaks definitely help. They're super beneficial. I mean, if you're going to put your money towards a mortgage each month, it may cost a little bit more than maybe rent, but with these tax deductions and write-offs that you get to use at the end of the year, it could be really, really beneficial for you. You may even have a nice large check coming back from the IRS. So I hope that this video provided some good information for you guys. And until the next video, I hope everybody stays safe, and I'll talk with you soon.